time for your markets. After a positive performance last week, Asian stock markets were largely down today. This as they followed the cue of a subdued performance out of the United States. While Hong Kong and Chinese stock markets registered declines, Tokyo was out on holiday due to the emperor's birthday. The Hang Seng Index ended the session down 0.6%, while the Shanghai Composite Index declined by 0.2%. US markets ended Friday's session in the red. This as the major indices struggled to recover from Thursday's sell-off, spurred on by disappointing economic data and poorer than expected corporate developments. The Dow Jones Industrial Average declined by 1.7%. The S&P 500 closed 1.71% in the red, while the Nasdaq Composite Index ended the session down 2.2%. All right, let's take a look at our local indicators. We see that the all-share index is currently trading down. It's down 0.8% at 88,146 index points. The rand is trading at 18.41 against the US dollar, 19.27 vis-a-vis the euro, and 23.26 against the British pound. In terms of our commodities, gold is trading at $2,942 an ounce, platinum at $966 an ounce, while Brent crude oil is trading at $74.65 a barrel. Let's unpack the markets with our guest, that is James Turp. He's the head of investment strategy for fixed income at Sanlam Investments. Thanks very much, James, for joining us. I understand that we're under time pressure, so without further ado, so last week, this is the last week, of course, of February. What do you expect to be the key drivers of global markets this week?
Thanks for having me, Nompu, and I'll be quick then. We've got that delayed CPI data out for South Africa on Wednesday. That's going to be an interesting one, of course, delayed because Stats SA reconfigured the basket. So perhaps the first number that came out was quite interesting to them, that they're rechecking the numbers. So that could be a point of volatility for us domestically on the interest rate side. Then, of course, we're all going to be waiting to see how the political discussions go regarding the budget that wasn't last week and that is going to come back in March. And so any developments around that story will be interesting. No significant data out today to be aware of. You've covered most of the market moves. Based on the performance of the equity markets on Friday, we've seen safe haven assets benefit today, so global bonds doing well, and our own bonds opened up a little bit firmer this morning. The currency not so strong, though, kind of bobbling around, as you say, that 1835 to 1840 level, so not much going on there. Seems like it'll be a quiet day for us at this point, but we'll be looking forward to those inflation data on Wednesday.
Yeah. James, just on the point that you were making around bonds and our local currency, given the non-event that was last week in terms of the tabling of the budget, do you expect to see either volatility or not so much direction in terms of our rand and also our bond market, given that the fact that we have no clarity as to what the budget actually will look like?
It's a huge conversation around this sort of budget that there are mixed opinions of, some saying that it's an absolute necessity to have done what was planned by raising that 2%, because we need to consolidate our debt levels, because we can't cut spending as quickly as you would hope to bring those ratios back in line. Then there are the others that are saying, well, if there's no commitment to slowing down spending, you can't just tax to make up the difference. So there are mixed views around that. Something that we haven't discussed, though, is that you mentioned in the run-up, that stage 6 load shedding. It's interesting to me that the market didn't open up negatively on the back of that. And I think that's kind of positive that the market is seeing it as a temporary break in power supply, and not, normally a year or so ago, markets would have really taken that news badly over the weekend, but we kind of came in to stable, if not a little bit stronger, fixed income market. So that's important. As far as the budget's concerned, though, getting back to that, it's going to be an interesting one, whether, of course, political process is the reason that this is going to be put out until March. Will that be an own goal, though, in the interest of following political process? Do we end up with less good a budget coming out of it, which would be kind of a weak point, perhaps, for the GNU, in that that we ultimately stick to positions for political reasons as opposed to what's best? I'm not so sure what the answer to that is, and we're going to have to wait a little while to get it.
So with just 1 minute to go, what would you say all of this means for business confidence, just in terms of not only investing on our markets, but in South Africa?
So, yeah, that's a good question. Business confidence, we know, picked up after the GNU formation last year and has been improving. But I think now we've got to see active steps taken and reforms taken that are investment friendly. So that's going to be critical, I think. So the budget was really the report card, or where we would get those answers out. So yeah, I think it's not going to help the fact that the budget was delayed, but if it does come out, and if that does keep the GNU in good shape, then ultimately that will contribute positively. But we're going to have to wait for that, aren't we, Nompu?
Yes, indeed, we are. Thank you so much, James, for your time and insights. Pleasure. Always. James Turp, he's the Head of Investment Strategy for Fixed Income at Sanlam Investments.